Dear students, today I'll be explaining y'all the merits of joint stock company. As I have already explained the features of joint stock company, merits or the advantages of joint stock company is that the very unique feature or the most advantageous concept of this joint stock company is that it has limited liability. The shareholders are liable to the extent of amount unpaid on the shares held by them. Also, only the assets of the company can be used to settle the debts, leaving the owner's property, personal property, free from any charge. Because there is a separate legal entity concept. Company is treated separate from its owners. Hence, the owner's property will not be utilized for the payment of the debts. It is only the assets of the company will be used to settle the debts. So this reduces the degree of risk borne by an investor. An investor, how much he invests. Suppose in our previous example, I took an example of Akshay, who is a shareholder in a company, who holds 2000 shares of 10 each. He has already paid 7 per share. Might be he has paid for in his first call 5 rupees and second call 2 rupees. Suppose it means that only 3 rupees per share has to be paid by him. He is an unpaid shareholder who has to pay 3 rupees every share. For 2000 shares, it will be 6000 rupees he is liable to pay. The company can make him liable to pay only to the extent of unpaid share capital amount or unpaid amount of share capital. So, he is not liable to pay anything towards the debts or losses of the company. So that is making the investor to reduce the degree of risk borne by an investor. The second is that transfer of interest. Yes, there is a free transferable, that is shares can be transferred easily by the shareholders. The ease of transfer of ownership adds to the advantage of investing in a company. It is not only that limited liability is adding an advantage of investing in a company. Here the transfer of interest as the share of public limited company, it has to be noted here children that only public limited company can be sold in the market, that is the share of the public limited who is held someone. For example, if an individual is a shareholder of public limited company, only the shareholder of public limited company can transfer his or her interest to someone else or to other person. It is not that a private limited company person, the shareholder of private limited company person cannot freely transfer his shares. So in the market, as such, can be easily converted into cash in case the need arises. If any time if they want to convert their share into cash, it can be converted easily by a shareholder of public limited company. This avoids blockage of investment and it presents the company as a favorable avenue for investment purpose. So this is providing an advantage to the investors to transfer their shares whenever they are in need of money. So this is avoiding the blockage of investment. If a person wants money, he can freely transfer. So this is not blocking the investment. This is continuing. So presents the company as a favorable avenue for investment purpose. So people get attracted towards such companies where there is freely transferable of their ownership. So that was the another advantage of this joint stock company children. So the next is perpetual existence. Existence of a company is not affected by the death or the retirement or the resignation or insolvency or insanity of its members, as it has a separate entity from its members. It is unlike your partnership It is unlike your sole proprietorship, where the person's death, person's retirement, person's insanity or insolvency will affect the continuity of that form of business organization. Here in case of joint stock company, members may come and members may go, but company go on forever. So that is the unique feature of this joint stock company, that it has perpetual existence. A company will continue to exist even if all the members die. Though the all member may die, the company go on forever. You may ask how? Because here the company is considered as an artificial person which is created by law. So company itself is an artificial person. Though the members may die, the company will continue. It can be liquidated only as per the provisions of the Companies Act, recent act 2013. According to that, the company can be liquidated, or we term it as a winding up of the company. So company can be closed down only when the law prescribes certain procedure. Only when that procedure is followed, it will be disclosed or it will be dissolved. So hence, children, company is created by law, company will be end up by the law itself. Next is scope for expansion. As children, here the scope of expansion as compared to the sole proprietorship and partnership forms of organization, a company has a large financial resources. It has much financial resource. Further, capital can be attracted from the public as well as through loans from banks and financial institutions. So thus there is a greater scope for expansion. Why there is a greater scope for expansion? Because it is not only that only the members are contributing. They can raise from the public, they can get through the loans, capital can be accumulated from the banks or any of the financial institution. It has a wider scope, children. The investors are inclined to invest in shares because of the limited liability, transferable ownership, and possibility of high returns in a company. So all these best advantages, all these unique features of the joint stock company is attracting the investors to invest in the shares. So thus it has a scope for expansion. Lastly, last advantage of this joint stock company is that professional management. It is not like the sole proprietorship where an individual only has to manage all the activities in the business. It is owners are different from the managers. Managers can be any professionals or any experts can be hired for managing the activities in a company. A company can afford to pay higher salaries to specialists and professionals. Any professional can be hired because it has huge accumulation of capital. Yes, company can pay for the higher salaries to the specialists and professionals. It can therefore employ people who are experts in their area of specializations. There can be n number of departments, there can be more and more divisions. We can hire good people, expert people. We can pay their expectation by paying them higher salaries. So the scale of operations in a company leads to division of work. Work will be divided as per the functions or as per the division, as per the department. Each department deals with a particular activity and is headed by an expert. A person who is very well versed in marketing department, he will be given to lead the marketing department. A person who is very good at sales department, he will be given at to manage the and lead the sales department. So that is how the person who is good at, the person who is expert at, they will be given a chance. So this leads to balanced decision making as well as greater efficiency in the company's operations. So efficiency can be achieved. What is efficiency? Reducing the cost but achieving the objective on time can be called as efficiency. So that efficiency can be achieved by operating on a large scale and taking a balanced, correct decision making in the company's operations. So that was about the merits of joint stock company. Thank you one and all.